Hello and welcome. We are joined by Tom Leitch, COO of TreasuryXpress, and we're going to be discussing the modernization of treasury management solutions. TreasuryXpress introduced a new model from 2015, and they now have 125 installations all over the world, growing at an incredible rate of 96% last year. Tom, why did you adopt this new model?
Yeah, that's a sort of core of what we're doing. So I think we saw back in sort of 2011, 2012 as a company that technology was really moving faster than everyone else anticipated. And we sort of took the conscious decision to be an early adopter because it would be beneficial in the long run. So in 2015, we launched our new product. And as you rightly said, we've acquired 125 clients since then and growing 96% each year. And I think that's a lot of it is we wanted to be ahead of the curve so that any changes in regulation, such as APIs coming out with PSD2, changes in regulation in the US as well, but also changes in things like cloud revolution, the adoption of that. We saw this as being important for our business case and also our viability moving forward. So we took the decision to move with technology rather than waiting to see the outcome. We sort of preempted.
So looking at this slide, which is full of two very important comments, what's Treasury fighting against at the moment? What does it mean in your terms?
If you look at research, even going as far back as 2008, 2009, after the recession, it was always harked on about that the biggest struggles that treasurers were seeing, either when adopting technology or using it, was twofold. So there's always the implications of cost. These used to be very cost prohibitive systems. And still are in some cases. And also with implementations, we saw a lot of the implementations taking 2 to 2.5 years' time. And that simply wasn't quick enough for the sort of change in play that corporate treasurers had, as they were needing to face changes in the marketplace much quicker than what the current systems could put up with.
And this is a story that's been going on over the last 10 and many more years beyond that. How did you react to this new framework? What did you do? Because you've moved to a on-demand model, which I don't really know what that means.
Well, yeah, let me outline what on-demand means. It's not perhaps what everyone perceives as it is, plug and play. I can buy it one day and use it the same day. We're sort of moving towards that. But what we mean by on-demand is something that essentially is shortened in time from what previously was. So as I mentioned, what used to be the place of implementation times taking a long time, we've now gone down and reduced our implementation times in some cases to 2 to 3 weeks. So on demand is more around speed of how quickly we can get it up and running. So from when you first speak to us to when we go live is much quicker, but also the concept of how it's delivered. And what I mean by that is often in the case of other competitors out there, it's all modular. So you may want, let's say, a forecasting system on day one. In a year's time, you may also then want to start doing things like in-house banking or netting. Now, if you were to do that, you'd have to go through a whole new implementation process with the old way of doing it. But being an on-demand solution means that we can essentially turn it on from that day and you can use it moving forward, as we encompass the whole system.
If we just move to the slide depicting that, everything seems to be driven by APIs, but what the hell does that mean?
That's a good question. I mean, a lot of what we're seeing moving forward is driven by APIs. I mean, if you look at perhaps what was being discussed 3 years ago, it's all about blockchain and how that's going to affect Treasury. But like we took a proactive stance on adopting cloud and moving to an on-demand model, we saw that APIs would be much more effective quicker than perhaps blockchain. So we have at the core of our system the ability to, let's say, feed into a bank when it comes to place in January next year with PSD2. We can feed in to receive the bank transactions and balances via APIs. But also we've seen a lot this year, and I think we won an award with one of the providers out there with our client ClearSettle around how we connected to Currency Cloud with an API. And we think that was probably one of the first sort of recognized movements of using an API with a treasury management system in the marketplace. So agreed, we have a lot of information around APIs and we want to use them a lot more, simply because they're a lot quicker and cheaper for the client.
But the exposure to the functionality inside an API becomes extreme. What happens if they don't work?
Well, it's a similar case if what happens if an SFTP doesn't work, or what happens if Swift connection goes down. It's not necessarily around what it doesn't work, because the theory behind it is it always should work. Well, once a line of code has been tested in an API environment, it's very unlikely to be changed. It may be tested in a separate environment, and then when it's been proven, it will go live. But the key area of the API is, let's say if they were to change it or it didn't work, we can quickly adapt within a few hours, rather than having to wait to find the core problem. Or if they do update it, we're made well aware before it switches, and we can test it on our end as well. So I think APIs, if the concept is they work or they malfunction, is the replacement or the fix is much more quicker and almost real time than it is previously.
Does that also include updates of the whole system, or is the whole update process gone?
No, that's a very good question. I think it's something that everyone's going to have to look at more proactively moving forward, both from a customer or a treasurer point of view, but also from a treasury management provider. Now, at the core of what our business is we are a technology company first, and then we work in the treasury space second. And if you look at how we update the system, we are the only vendor out there that does bi-weekly updates. So we are one of the only vendors out there, I believe the only vendor out there, that updates on such a high frequency. So we update bi-weekly, yes. Every 2 weeks we release an update. And then monthly we do large updates, which may be a new functionality or new reports available to the client. Now,
that's a whole new model.
It's a whole new model. It's a new way of doing it, but it's not a complete new way of thinking as a human being or as a company, but it is very new for Treasury. And if you look at Treasury in the last, even since inception of Treasury management systems, I suppose that was when they first started, was the only disruption that happened. Since then, they've all been working on on the same status quo. Now, when we came about in 2015, we wanted to change that status quo because it wasn't having a positive effect to the corporate treasurers. They'd have to pay for upgrades, they'd have to wait 6 months or a year for an upgrade. With our system, it's more or less a live, evolving system. What I mean by that is we're continually adapting to what's being changed in the real world to help the corporate treasurers. And that's essentially also ties back into the on-demand function. Is when something new comes around, we're again preempting it, or we're changing to it to help the treasurers and give them immediate responses and the possibility of using that to their advantage.
So does that mean each time there is a new upgrade, there's a new price? When does the price change, or is it just an annual fee?
Currently what we do is we price it off 3 factors just to have the system, which are based around connectivity type, whether that be Swift or API or SFTP. The secondly, it's priced on number of accounts you would like linked to the system. And then thirdly, it's based around, would you like to make payments, yes or no? There's nothing around user numbers or number of updates or modules or number of transactions. It's a very black and white, simple structure. Now, when we do update, of course, we do a lot of testing ourselves to make sure these updates work, but also we inform the client of what these updates will be, and they can opt out from it. Now, most customers go along with it and they accept these changes, and if they don't want to see it, they switch it off and they just hide it. But they're continually, because they buy into our concept of being a technology company first, they want to be on the latest technology and they want to have the latest advancements backing up their system. So everyone who has our system buys into what we're doing, and that can be really shown actually in our retention rate over the last even since when we really started in 2007 with the old model, but even with the new model, we've only lost 3 clients in 10 years' time. And a lot of that is down to our ability to service and customize a solution for our clients, but also with the update rates.
So looking forward, where does this take you? What does it do to Treasury?
Well, I think we really started this mission with a core idea, and that is to move treasurers away from Excel. Excel is a very good, robust tool, but it has some fundamental flaws and requires a lot of manual work. So our idea moving forward is, as I mentioned earlier on, we really removed the first 2 big hurdles, which were cost of the solution and time to implement. So we hope to see a lot more customers from the mid-market all the way up to the enterprise size level acquire us as their vendor. And that will enable treasurers who may be part of a small group or a large company, the ability to utilize a treasury management system without having the negative impacts on the company, which is, can be very long. They have to spend a lot of time of their normal working day to get the system up and running. With us, we hand the system back fully live. So customers can go from day one, 2 to 3 weeks later, and have a full functioning visibility, cash management tool, and all the works around it. So what we're seeing moving forward is a lot around, I suppose, our adoption rates from potential customers. We're going to see that increase. And as we mentioned before, this year we've done 96% growth. We're also going to see the positive effects of regulations such as PSD2. We're thinking that's going to really, I suppose, give the smaller treasurers, the more tech-savvy treasurers, the ability to utilize them much quicker and cheaper for their advantage. I think a lot of what we're also going to see is around the adoption rate of cloud computing continue to move upwards. We've seen a huge growth over the last 5 years. But what we've really seen the last 2 years is what I consider to be the second revolution of cloud computing. So the economies of scale of things like Amazon and Microsoft Azure, and also the ability for a company to adopt a private cloud. Now, there's benefits with the cloud that weren't previously seen, or everyone was quite hesitant around the security of these. But I think those myths over the last sort of 3 or 4 years have been dispelled. And I think we're going to see almost every customer we have on our system move to a cloud-based environment. But of course, with some of, let's say, the government bodies we work with, or some of the larger corporates, in the Middle East mainly, and also North Africa, we're seeing a lot of locally hosted systems. And that will always continue, but we're seeing a true preference and understanding of the benefits of cloud computing now moving towards that way.
I can now understand why your on-demand treasury management model is so successful, and that you're a technology company driving and working in treasury. Does that give you the entree to more companies, because you're starting to talk about much bigger companies now rather than the ones you talked about earlier? Is that also going to change, that the large-scale companies' solutions won't necessarily come from the big suppliers anymore?
I think you're right. I mean, there's always a perception in the marketplace, bigger is better. So those customers, those vendors that have been around for a long time and have got bigger and bigger with consolidation in the marketplace, some customers and some treasurers do perceive as that being big is best. Now, we've spent a lot of our time educating the market since we've launched. And of course, we did have those early adopters of people who realized that technology should come first, and we should be a technology company and then a treasury company second. But what we're seeing now is even ourselves being invited to more and more RFPs and days to speak to potential clients, because they're understanding now that what we've been saying for the last 3 years is actually the correct way of doing it. I'm not saying that everyone else is wrong. I'm perhaps saying that we're in a better position to service everyone moving forward. We are in a very key core position to utilize where we are right now, as we are pioneering it, and we've been having 3 or 4 years of experience with our new way of doing it.
And this is all reflected in the fact that you only have 50 staff, yet you have 125 installations worldwide.
And everyone can help each other out. So because we run on one technology and one system, regardless of which modules you need, there's no real difference between any of our customers. And what I mean by that is the system is the same. So if I have customer A ring me one moment and customer Z ring me, I know exactly what system they're on and how it operates, and I can help them. So it's a very flat organization. The way we service our clients is also very unique to everyone else.
Thank you, Tom. Most interesting and revealing as to the dynamics of the treasury management space.
No worries, Jack. Thank you very much for the time to talk to you.